Hello everyone. This is a video on sale of property. Property is the most valuable asset for anyone in Australia. So what do you do when you have sold a property? If you have any questions, I think it will be solved in this video. It will be answered in this video. Because when you sell a property, you get a lot of money. Not money, you get a lot of money. Especially if you are holding it for a long time. The more time you are holding with, like you bought 20-30 years back, the more money you will make, so you get a lot of money. Now how much will the tax office take it? So I'm going to answer your questions here, that what to do when you have sold the property. Let's move to the next slide. Okay, if you have sold your own property in the house where you live in, right, if you're living in the house since you have bought, you have not rented it out, never rented it out, you don't have a granny flat or you don't have any source of income from there, you do not have to worry. You might make $1 million profit, 5 million, 10 million, 100 million, does not matter. It is entirely tax free. The amount of profit you are making, it is not important. It is tax free. As long as you have always lived in the property, you have not done any business or any rental income from there. You have not used it as a business. Business is when you have not earned any rental income from there. If there is a rental income from there, maybe you built a granny or you rented out few rooms, there can be issues in capital gain, but we are keeping it simple. Simple rule is, if it is your own home, your principal place of residence, from the day you have bought till the day you have sold, it is entirely tax free, irrespective of the amount. There is no document required, nothing required. So do not worry about it. Let's move to the next slide. Okay, what about if rental property is sold? So if you bought a property and you put it on rent from day one, and now you want to sell maybe after 5 years or 10 years, and you are making quite a big capital gain on that, right? Because property obviously appreciates over a period of time. So what records do you need? You don't have to worry at all. Do not worry. There are three factors. There are three types of transactions which you should be worried of. Number one is purchase, sales, and any improvements you have done. Now, what is purchase transactions? The date you have purchased, the amount you have purchased, stamp duty you paid, and any expenses you paid on purchase. That all those figures can be available from your solicitor. You don't need any record. If you check your old file, if you have it, that's fine. If you do not have it, your solicitor who settled the property, he will issue you with the settlement figures, his tax invoice, everything he will give you. Those figures are enough, because that has got all the figures, right? Most of the figures, 90% of what you want on purchase. The second type of transaction is improvement. What do you mean by improvement? Improvement means if you have built an extra room, if you have built extra bathroom, if you have built maybe a granny flat for your own use, or what for rental, whatever. So what you need, obviously you need a builder's contract, like who built it, how much was it built for, and how much was the amount, and what was the date. Those things we need. But for small repairs you don't need a receipt, because small repairs you have already claimed in the tax. For example, if you have changed bulb, or if you have changed the fan, those things you have already claimed in your tax returns. We are talking about capital changes, capital improvements. Capital improvement is, you have added a room, you have added a pergola, you have added a granny flat, something like that. So what you need is a builder's contract, or some transactions which shows how much you paid, when you paid, and what was the date. Those things are required. So this is the second type of transaction you need. Third transaction is sales. What do you need in sales? You need sales price, you need the seller's commission, the agent, how much money you paid to the agent, and the bank fees and charges. Since sale will be a recent transaction, so I'm pretty sure you will have all the sales record. You can have from the real estate agent his invoice, from the conveyancer you can have the settlement statement. It will have all the figures of sales, of his fees, and whatever expenses you have paid from there, those things will be covered there. So what you have to do, you have to keep a summary of all these transactions, bring those documents to your accountant or tax agent, and then he will be able to prepare your tax return and he can tell you how much is the profit. You need to, just a quick note, if your date of purchase and date of sale, if it is less than a year, then on the entire amount you will be paying tax. On the other hand, if you sold 1 year after buying, then it will be long-term capital gain. Only half of that will be taken as a profit and it will be added to your income. Let us say your salary is 60,000, long-term capital gain is 100,000, so you are going to pay tax on 160,000. There is no special rate, there is no fixed rate for capital gain. It is added to your normal ordinary income and then you pay tax on that, right? Let's move to the next slide. Okay, so what is the tip of the day? Tip of the day is big taxes payable. Do not have to worry about it. The longer you hold, the more tax will be payable because property appreciates over a period of time. If you buy and sell it in a year or two, there is no profit. You have to hold it for a very long period of time to make some profit. The more profit, the more tax is payable. If you hold more than 1 year, it is long-term capital gain. You reduce it by half. Straight away reduce by half. Can you reduce taxes? Yes, you can reduce taxes, but you have to plan it in that year. If the year has finished and you say, oh, I have made capital gain of this much in last financial year, can you do anything? It is too late. You need to plan in advance. If you're selling, you need to talk to your tax agent. I am planning to sell. What are my tax consequences? How can I save the tax? He will tell you something about super contribution or something like that. There are few things you can do, but you have to plan in advance, right? So don't come after the year, you have to do it within the year. All right. Thanks for watching. This is a short video, just a quick tips on what you need to do if you have sold your property. If you have sold your home, it is tax free. If you have sold rental property, after 1 year it is long term, less than 1 year it is normal capital gain. If you have any other questions, you can email us, you can register and then email us. We will be happy to help you. We can help you in tax planning so that you can save taxes if you have sold the property. Thanks for watching. Please share this video. If you have liked it, please share this video. See you in the next video. Bye for now.